So here, the illustration number 29, we are going to see that determining the amount due to retiring partners and transfer to his loan account. So indirectly full-fledged questions we are going to do now. Okay. So
Yes, sir.
here ABC were partners in a business sharing profit and losses in the ratio 3 is to 2 is to 1. Their balance sheet as at 31st March 2024 was. You could find out liabilities given, general reserve given, capital given, and this side cash in hand, cash at bank, sundry debtors, stock in hand, machinery, building has given. And after that, C retired. So exactly same way how we have learned, same way we are moving that one by one. We will touch one by one point and finishing that moment only. First of all, we are going to see that what are the things they are asking here. Prepare revaluation account, partners capital account, and C's loan account and balance sheet. Everything they are asking here, right? So all that things, C's loan at the end we are going to make, but all three things first we are going to do, that is revaluation account, partners capital account, and balance sheet. Now first we are starting the balance sheet old, right? When we are checking the balance sheet old, just a second. So here that as per our pattern, what we have understand how to start that. All three things I'm writing first. I'm making that all format, revaluation account format, partners capital account, and balance sheet. Loan account at the end we are going to make. Okay. So loan account you keep aside. We will see that how to deal with that, right? Okay. So now first thing first, we are moving to the balance sheet, old balance sheet, liability side. First thing we are going to see that the partners capital. So A, B, C, three capital, 1 lakh, 1 lakh, 1 lakh. I'm directly moving to the partners capital account and writing credit side here by balance brought down 1 lakh, 1 lakh, 1 lakh. Now first part over. Second thing I'm going to find out in old balance sheet four things. What are the four things are there? General reserve, workman compensation reserve, investment fluctuation fund. Every time I am telling, but I am telling you that these four things you should remember. Okay, and P&L if any given. So now as per this I am finding here the one thing has given the general reserve 60,000. Now general reserve, if any adjustment not given in down in points, directly this general reserve I can distribute, right? Out of 4 it is given there. You could find out that one time that if is there any, they told about that the general reserve we should not be distribute, it is only adjusted among the partners if it is anything given like that. So that time the general reserve will not to be distributed, that will be prepare sacrificing and gaining ratio, and as per this adjust as per exactly like goodwill, but like that not given anything. So general reserve directly moving to the partners capital account, I am distributing the old ratio, general reserve 3 is to 2 is to 1. Next part. Next old balance sheet I'm going to find out here this side three things. What is that? Again P&L account, next advertisement suspense account, and next goodwill. Now could you find out that anything is there given? I guess you found already there is nothing given like that, so that there is not requirement any distribution in debit side. Now I'm coming to that. C retires from business 1st April 2024. It was agreed that the amount due to him will be paid on 30th June 2024. That means at the moment the person retired, that time the firm not paid that money. Okay. So if the firm paid that money directly, we can write to bank account. The payment the firm has done, so to bank account. As that point, we can mention that. But the thing is that that day only that firm not paid. Firm is asking that some of the time because of that it's a huge money. So firm told that dear that we will pay that, but give me some time. Give me some time. How much time taken? After 3 months. So 30th June they will pay, so that all the due money should pay to the retired partner, that is C, that will go to the C's loan account and that will be paid later. Okay, first point is here like that. Okay, next point number we are going to see one by one. Let's see. Provide for doubtful debt 5% on sundry debtors. Now you could find out here the sundry debtors was 90,000 5%. That means it is a loss. Loss indirectly goes to our revaluation account. So we are moving to now all the revaluation point one by one. Now revaluation point, we know very well that any revaluation things is come directly, it will relate to the balance sheet. So the provision for doubtful debts 4,500, that is 5% of 90,000. I have written debit side, loss side. Now, exactly that will move to the new balance sheet also directly. So, I have taken here sundry debtors 90,000 and minus 4,500, total 85,500 I have taken in the new balance sheet as it is reduced from debtors. Next point number 2. Reduce the stock by 5% and machinery by 10%. You have written that that's by. By means what? There is a no difference we are calculating. Directly that amount we are calculating and that amount treated as a loss only. So stock amount, stock in hand 70,000 and the 5% of stock reduced. So 3,500. So stock reduce 3,500. You could find out 70,000, 70,000, 10% is 7,000. So 5% definitely is 3,500. Now again, exactly same way we are moving to the new balance sheet. And here I have written a stock in hand after subtracting 3,500. So 66,500 I have written new balance sheet present value. Again, next one is the machinery. Machinery by 10%. Machinery value was 60,000. Now 60,000, 10% is 6,000. So now balance here 6,000 reduced. 6,000 I have written in the revaluation account debit side. Again I am moving directly to the balance sheet and I am writing after subtracting 6,000, that is machinery 54,000. I guess clear. Next part, there is building had to be revalued at 1,51,000. If you could find out here the building, how much was there? Building was 1,40,000. Now revalued at 1,51,000. So definitely it is increased some amount. So when increased some amount, how much increased? Now building value was 1,40,000 to 1,51,000. So 11,000 increases I have written credit side by building, and again as per the rule we are moving directly the new balance sheet where I have written building 1,51,000, 1,40,000 plus 11,000 increased value. Next thing, A and B will continue carry the business and shall share profit and losses equally in future. New profit sharing ratio already given to you, and old profit sharing 3 is to 2 is to 1. This 1 by 6 retire, right? 3 is to 2 is to 1. 1 by 6 retire. Who? C retire. And now their profit sharing ratio is A and B 1 by 2, 1 by 2 equally. Now new also you have ratio, old also you have, easily you can find out the gaining ratio. Why gaining ratio? As per the gaining ratio the goodwill will be given. So now I am finding gaining ratio here. You could find out for A 1 by 2 new minus old 3 by 6, that is a 0, nothing done. And second B 1 by 2, 2 by 6, 1 by 6 gaining. Now B only gained, so B will give every amount of goodwill given to C. Now the firm's goodwill given to you, let's see the firm's goodwill given what. So now firm's goodwill valued at 1,50,000. Now 1/6 of 1,50,000 will be given to the partner C. So 1 by 6 of 1,50,000, you could find out amount is 25,000. So B will be given. So what we are going to do this point? Directly to the partner's capital. So here I have written by B's capital account, amount goes to C. because C is retiring, C is sacrificing his share, so that by B's capital account 25,000, exactly this 25,000, because of B's capital already exists from the beginning, so I will take that amount from B. So I have taken here this side, so to C's capital account I have taken from B this 25,000. So 25,000 I have taken from B and given to C. Goodwill over. Clear now?
Yes, sir.
Next, last one point has given there. A furniture purchased on 1st January 2024 for rupees 4,000 accounted as expenses to be bought into account, charging depreciation 10%. Remember this point. So 1st January 2024, one machine has furniture has purchased, and this furniture not taken as expenses. This was unaccounted assets. Okay, now unaccounted assets. Now this one we should consider when we are doing consider. Now again from that time you are going to make this full year thing, right? And you are making when 31st March 2024. Now you could find out a furniture purchase of 1st January 2024. So how many months are there? If you could find out, and the retirement is 1st April 2024. So how many months is there? 3 months: January, February, March. This 3 month depreciation we should subtract from the furniture, and that amount to be treated as an unaccounted asset. So definitely before it was not there in balance sheet, so it is my profit even, right? But the depreciation charges we will subtract. So now 4,000 rupees as a furniture into depreciation rate is 10 percentage into for 3 month, 3 by 12. So 0 0 0 0 cut 2 zeros here by 4. I can find out 100 rupees. Now 100 rupees depreciation. So out of 4,000, 100 rupees depreciation. So how much I can accounting? Here I can account it 3,900. So 3,900 it is my benefit. So buy furniture 3,900 I have written here in revaluation account. And one more thing, furniture it was not accounted before. So directly what we are going to do, we are moving to the new balance sheet, and directly that new furniture I have written here and 3,900 only. There will be no add subtraction before it was, because not there. Before it was not there. So directly furniture I have taken. So this is are all the points one by one we have taken and we have done this. So how we have touched that one point and finish in that moment you could understand. Now at the end result is what? We are going to do the revaluation account balancing. Now balancing in that 900 rupees benefit revaluation account. First revaluation account we are doing balance. So that to gain transferred to A's capital, B's capital, C's capital. Now benefit directly goes to the partner's capital account. Here I have written revaluation profit by revaluation account gain 450, 300 and 150. After giving that things we can do now partners capital account also tally, because of everything other already all points we have considered. Now partners capital account when we have done tally, there will be for balance carried down only for A and B, because of C is retiring, C will not to be any more balance carried down. So these are the 2 points were there. As compared to that, if you comparing with the admission and retirement, only 2 point changes. What is that? One is the goodwill thing, one is the goodwill thing, where this one we have seen 25,000. So that the person is going out, they are sacrificing, and the person in, they are gaining. So that B gaining that time. So B has given to C 25,000 and this point. So now balance carried down, we found here for A nothing was there in debit side. So full amount 1,30,450 total full amount will be balance carried down. Here total amount is 1,20,300. B sum of the amount paid, that is in form of premium, if you remember, 25,000, and the remaining money treated as a balance carried down 95,300. And for C we are not here writing as a balance carried down, we are writing of what? Loan account. So here the C's loan account direct amount 1,35,150. This amount, when they are going to pay, they are going to pay 30th June. If you not forget that, this point has given that moment they are not paying. They are paying when? They are paying 30th June 2024. So up to this, you understood how to deal with that. At the end, partners capital balance we are transferring that to the new balance sheet. So 1,30,450, 95,300 I have taken capital account. A and B, 1,30,450, 95,300, 2,25,750. And this loan account I will not take as in the form of capital. I will take here C's loan account 1,35,150. Okay, done. Now we are moving to the cash. If any cash you paid through this, if not paid, directly what is that old balance sheet cash we had, same amount we will. Because of that, that adjustment of capital as goodwill, that is not there, so that cash involvement was not there, simple way. So that cash in hand, how much was there? 6,000, exactly same amount I am taking in the new balance sheet. Okay, so there is no increase, no decreases cash. So directly cash in hand, and after that payment also not done to the new partner, so that retire partners, so that that cash at bank also same amount I am transferring. So I will check now any one of the transactions that we have not considered. Okay, any one of the transactions we have not considered for the new balance sheet, we will going to take now. Now, cash in hand, cash at bank, sundry debtors already taken, stock already taken, machinery already taken, building also taken. If you could not understand there, I'm showing you here. When we have done revaluation account, now all that things we have taken. Now see, cash in hand taken, cash at bank taken later. And no stock in hand, sundry debtors, furniture, machinery, building, all taken at the time of revaluation only. And liability side, one thing not taken, that is sundry creditors. If you could find out, sundry creditors. See here, 16,000, that amount also I am taking now. Sundry creditors. And at the end, we are doing tally. And remember that when we are doing tally, C's loan account we have already taken here, right? C's loan account, here I have taken 1,35,150. Now tally it, it will tally. Now at the end, what they're asking, please make C's loan account also. Now C's loan account, if you could find out now C's loan account, what you have written here in partners capital, you have not paid yet. So C's loan account as at date 1st April 2024. So what you are making here, see, partners capital account debit to C's loan account, correct or not? You have written this side, no? Balance carried down. So it is balance in figure. So partners capital account debit to C's loan account. Now I'm making C's loan account. So C's loan account. Can I write by C's capital? Simple, no? C's capital account debit to C's loan account. Again, C's capital account debit to C's loan account. Simple C's loan account. Now I am making this one. So can I write as per the ledger? C's capital by C's capital 1,35,150. Now do tally. Simple, you have not paid yet. If you paid here, two bank account I can write here. I have not paid yet. So directly balance carried down. Here 1,35,150. Clear this point? Tell me any doubt up to this?